Hi guys, Piotr here, this LiteFinance Global YouTube channel again. It's my pleasure to be with you. Well, what we are going to discuss today, very hot topic. We are going to discuss entry tech when it comes to the FX trading based on some kind of the stop hunt and fake rallies or fake move to the downside, especially if it's against the overall trend, or we are going to also discuss trading the fakes both sides, especially when the market is ranging, right? So trying to visualize what we are going to discuss today, it could be the case that overall market is going to the upside, right? Then based on especially horizontal lines where we have drew some support and resistance levels, right? We are looking for a pullback. We are looking for a move to the downside, right, with some fake attempt to break off the support and then moving higher. That's the number one thing, right? Number two thing, market overall is going down and we have our resistance, we have our support. Market is trying to make the move against the overall trend. We have some kind of the rally and we are waiting for some kind of the symptoms. It could be the fake rally and how we might to approach. There is a front run attempt, there is a conservative attempt, the possibility to trade that one, and finally if we have the range market, we are trying very aggressively trade this type of the fakes in both directions, all right? And well, first and foremost, guys, you have to do your own research, right? You have to do your own homework. It's one of the easiest approach to the market, especially during the market conditions we have right now. Plenty of fakes, plenty of stop count rallies, stop count moves down, both sides stop count, and well, that's why I'm so excited, because it's a really easy approach. We are going to start and discuss the things based on the intraday chart, but I might suggest to you, go and do your top-down analysis from as high as a monthly or weekly chart, just for you to recognize where you are, especially if you are a novice trader. For most advanced, probably you already know what is the kind of direction, and you already know the support, resistance, demand, supply based on the higher time frames. And well, we are not gonna do this again, top-down analysis again. Each of us is a different type of the trader, different types of the approach are suitable for us. So again, you have to make plenty of tests before you are going to go and risk real money, real life, right? So based on this intraday chart, right, if we are going to start the last few days, right, so what is important point on this euro dollar chart, on the hourly chart, was this move to the downside. Why it was so important? Because based on the short-term price action, right, we've seen the market went lower, right, broke through the few latest demands, and that's the crucial. Why? Because lately on the retest of this broken trend line, we had the first fake move to the upside, right? So we might, based on that particular breakdown, we might place the horizontal line as well, all right? Okay, so guys, if you know how, where to place the line we are talking about, it's gonna be much easier for you to determine your trading strategy. In that case, you might want to go And once we are approaching these levels, you might try to be conservative, wait for this early chart, because we are talking about the early chart, to close the full candle and trying to trade after the close, the retrace, for example, right, into that point. Or you might want to switch to the lower time frame, and immediately on the rejection of that level, you might try to join the party or a shorter time frame where your stop probably is gonna be much tighter, meaning that it's gonna be much easier to reach 3R in your case. That's the thing. Now with the move. Another move, right? We might even want to do another line closer to what we've seen lately. So let's move that line lower. Another fake here, right? Pretty much, I would say even 2 fakes if you wish. Anyway, why it was so important and how I would draw that line based on what we already seen, for example here, what we already seen here, and for example what we've seen here. So this type of the move, fake long shadow, retest of that level, continuation to the downside. So that was another way of the fake. But also you may want to try to take a little bit bigger picture, and for example, you may want to have few more lines where we have significant highs. That's what we have here, and this type of the price action over here, nothing else than stop count and well, perfectly clear trade based on the bigger picture. That's why I've mentioned that you should do your top-down analysis from the higher time frame as well. As you can see, this fake over here is also related to this possible inverted head and shoulder over here, where the shoulders were working as the possible supply. Perfect fake trade. So if we are here on a bigger on a bigger picture, also using only this 1 hour chart, you might see more fake trades we discussed a second ago. Another fake to the downside. Again, if it's ranging market like what we have here, you are trying to trade both directions, right? Of course you would be stop out here, right? If you are doing top-down analysis from the higher time frame, you will recognize if market is rising, falling, or ranging, right? We know the entry, we know that the stop has a possibility to be very tight, so we know that we might trade 3R or more R quickly. Also, what other choice could be if we wanna to close our trade? Of course, the fake to the opposite side. The fake to the opposite side, right? Could be the choice to try to exit the trade. Well, to be honest with you, this entry tech, especially on the Forex market, is working perfectly fine on all majors, right? Other crosses, well, you might have tough times, spreads are higher, stops are wider, so, well, trying to master this strategy, I would definitely use majors like euro dollar, cable, dollar yen, dollar Swiss franc. That's where I see the biggest potential. Again, great for day traders, especially where you can trade actively over the course of the day once you place your lines precisely, and well, your stop is gonna be tight, right? And the potential is really big. With that being said, first, make plenty of tests, adopt the strategy to yourself, and then I wish you great next trading day. Thank you very much, take care, and goodbye.